time for the big fat idea. Drew Zimmerman joins me with PI Financial, futures advisor, investment in commodities, that kind of stuff. Hey, Drew, we just been talking about Michael Levy, that the Bank of Canada midweek said there's not going to be a rise in Canadian interest rates, but I think you could make a case that the biggest story in the financial world is that the U.S. rates are on their way up. They've clearly bottomed. We've been seeing it since July, but lots of confirmation. And give me the implications of that, or how you are using that information and translating that into some action for investors.
Well, that's exactly right, Mike. We see the interest rate space as one that bottomed in July. And if we see it going higher, we think it's going higher faster in the United States than any other country in the world. So that also has implications in the currency space. We see that yield spread differential widening further and keeping upward pressure on the U.S. dollar.
And I'm always trying to, I think that's something we want to come back to. Just give me one sec, but give me an example of how the interest rates, people don't think in terms of bond prices, they think of what's happened to interest rates. So how about, let's take like a 10-year U.S. bond. What's happened in the last few months?
Well, exactly, Mike. In the last 5 months from the July low, we were at 1.36% on the U.S. bond. That was U.S. yields at all-time lows. We had trillions of dollars of negative yielding debt through Europe and Japan. We've now had that 10-year hit 2.46%. That's a 1.1% increase in the last 5 months, or an 80% jump in a 10-year interest rate. It's been absolutely huge.
And this is what, I mean, again, as you can tell, I'm sort of desperate to get people to recognize this. You won't have heard this, I bet, on a single newscast. You wouldn't have read it in a single column. No, we're talking about climate change every day instead. I'm not saying you don't talk about that, but I'm saying there is many more issues despite, other than that. Hey, that obviously has coincided with a rise in the U.S. dollar. It's not tough to figure out. I got 0% in Germany in a 10-year, or I can say, as you just said, Drew, basically 2.5% in U.S. I know which one I'm taking. Obviously, there's a lot of agreement in the world, but what about how do we play this? I mean, play isn't a good word. How do we take advantage of that move?
Well, exactly. So there's a lot of ways to do it. There's the futures market that has pricing on these interest rate derivatives. You're able to buy the options, buy the futures outright. You're able to get in and buy the U.S. dollar. We continue to see reason to have a multi-year bull market in the U.S. dollar. I mean, Mike, this has been a 35-year downtrend in the U.S. interest rate environment. So if we do get a turn here, don't think that you've missed it already just because 5 months have gone by. This is something that can be big. And it's also been an entire generation that doesn't know how to deal with rising interest rates. That means your mortgage is going higher. That means your car loans are going to be higher. That means your line of credit is going to be higher. You need to be positioning yourself to be ready to pay some higher interest. And that's just not something that my generation especially knows how to deal with. We've always had lower rates the longer we wait, and that's just not going to be the case anymore.
Well, it's a great point. So you can phone someone like Drew and you go into the futures market, the option market to play that. Other people can simply, as you said, Drew, convert, because we've had a 2.5-cent jump in the Canadian dollar in the last couple of weeks, I think thanks to oil. Made me make some conversion there. And can you give me a quick, you got 5 seconds, how long do you think this will last? As you just said, we've had 5 months, but it may go years.
Well, like I said, it's been 35 years moving down. We've had 5 months going higher. You know, this is not something you want to judge on a weekly price basis. This is going to be something where year after year, interest rates are going to be higher.
Great stuff. Drew Zimmerman can be found at PI Financial in Vancouver. Thanks, Drew. Let's